Welcome to AIinFinance Tales. AI is replacing accountants faster than anyone expected. Accounting was supposed to be safe, stable, predictable, respected. For decades, becoming an accountant meant you'd never worry about automation. But today, quietly, efficiently, without headlines, all is replacing accountants faster than anyone expected. Not in the future, not eventually. Right now. And by the end of this video, you'll understand why this is happening, who's most at risk, and why the accounting profession may never look the same again. So here's the strange part. There was no announcement. No massive layoffs on the news. No dramatic collapse. Instead, something more dangerous happened. Accounting jobs didn't disappear. They stopped being created. And that's the first warning sign most people missed. The illusion of softy. For years, accounting ranked among the most automation-proof careers. Why? Because it required compliance knowledge, complex decision-making, human responsibility. Machines weren't supposed to handle that. But AI didn't replace accountants by thinking like humans. It replaced them by removing the need for humans altogether in large parts of the process. Data entry, reconciliation, expense categorization, invoice matching, audit sampling, and tax preparation. These weren't glamorous tasks, but they were the foundation of millions of accounting jobs. And all learned them faster than anyone predicted. So what's replacing accountants isn't one giant all system. It's thousands of small tools quietly stitched together that companies barely talk about. And that's where the real disruption begins. How AI actually replacing accountants? Let's be very clear, AI didn't steal accounting jobs. It made them unnecessary. Modern all accounting systems can now automatically classify transactions with near-perfect accuracy, detect anomalies better than junior auditors, generate financial statements in seconds, predict cash flow before problems occur, flag tax risks before humans even notice them. What once took a team of junior accountants now takes one senior reviewer, one all system, zero overtime. This is not theoretical. This is already standard in mid-size firms, e-commerce businesses, SaaS companies. The result? Fewer entry-level roles, fewer internships, fewer training pipelines. And when entry-level jobs disappear, entire professions slowly collapse from the bottom up. But here's the part no one wants to say out loud. All isn't just replacing junior accountants. It's coming for something far more important. The most dangerous shift. Historically, accounting followed a simple ladder. Junior, senior, manager, partner. AI breaks that ladder. Because if all handles data, reconciliation, reporting, forecasting, then firms no longer need large teams to train the next generation. They need a few experts and very powerful software, which means the future of accounting is not growth, it's consolidation. Fewer people, more responsibility, higher pressure, and less forgiveness. The profession isn't dying, but it's becoming elite only. So the question isn't, will all replace accountants? The real question is, which accountants survive? Who wins, who loses? Here's the uncomfortable truth. Accountants who only follow rules, enter data, prepare reports are the first to go. But accountants who interpret strategy, advise businesses, understand all systems, translate numbers into decisions, become more valuable than ever. AI doesn't eliminate expertise. It punishes passivity. The safest accountants are no longer the most technical. They're the most adaptable. The real warning. All isn't coming for accounting. It's coming for complacency. And accounting is just the beginning. The real danger isn't job loss. It's believing your profession is immune until one day the ladder disappears beneath you. The question isn't whether all will replace accountants. It's whether you'll adapt before it quietly does. Thanks for watching. So if you want more deep, honest breakdowns on how all is reshaping finance, like and subscribe the channel for more videos.